Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is August 25th, 2023. It is now 3:02 p.m. Central Time. Just about an hour left in the trading day for bonds and mortgage-backed securities. Today was a pretty big day, highly anticipated. We wanted to hear what was going to be said by Jerome Powell and the General Federal Reserve Board after their Jackson Hole symposium, their annual retreat, where they take some time and talk a little bit further and more deeply into what is going on with the economy and what they're going to do about it. So let's take a quick look here at some headlines. Fed Chair Powell calls inflation too high and warns that we are prepared to raise rates further. Well, the media always wants to fire things up the most that they can. And in general, I listened to the speech from Jerome Powell, and he really didn't seem to be that aggressive. He seemed to continue to say, we're going to monitor the situation. We're going to monitor the situation. We will increase the federal funds rate. We will be more hawkish if we need to be, but we're going to monitor the situation. And he did at one point mention pausing for a period if they see things setting in. He also did multiple times confirm that they do see inflation subsiding. It's just they don't want to let off the gas and allow it to that fire to build up again. Well, as you know, and if you're watching the Brent Bruce Daily, you know that the fire has been just absolutely doused. It's just going to take a little while before we will see the damage that has been done to the economy all the way. I mean, just in every sector from increasing the federal funds rate so quickly. But it did sound good that he was acknowledging that those things are occurring. So in general, I think it was a fairly calm speech that came out from him, and the markets tend to agree with me right now. So overall, when we look at the mortgage-backed securities, we are up 3 basis points, and the 10-year Treasury is flat. So again, everyone is saying, well, that was pretty muted. Wasn't a whole lot of news there. We come over here, we are, having a day where we did have a pretty big range up and down, which is highly, expected when we're having big news like this coming out. Now, again, today is Friday, the end of the week. So traditionally, banks are going to pull back a little bit, pull some chips off the table, and wait to see what happens over the weekend before they put some money back into the market. But currently, we're up 3 basis points and really flat here on the 10-year Treasury. How is that rolling over with a couple of good days that we've had here with mortgage-backed securities? How is that rolling over to our home loans? So let's take a look at the scenario here. The Brent Bruce Daily, the very well qualified 30-year fixed conventional that is available through Rancho Capital and brokers only, guys. This is not something you can go get from your local mortgage banker or probably who you have been banking with or referring your business to for a very long time, unless they happen to be very aggressive brokers. The loan store right now, 7.5%, $515 in credit. United Wholesale creeping back into the mix here, 7.5% with a credit of $18. Let's open this up here and take a look and see what 1 point is going to buy us. 1 point is going to buy us down to 6.99. If you watch this show, you know that it's exactly where we were yesterday, right? Take a look at 5.99. Remember these days? Well, right now it's going to cost you 4 points. Let's take a look and see what the loan store has to say about 5.99. Basically 6 for them, a little bit over 4 points. So once again, the buy down is better with United Wholesale than with the loan store. Now, really quickly here, let's take a look and put this up for just a second so that compliance can see what's going on and that we are sticking to the rules here. What's coming up here? What's going to be the next big thing that's going to move? Well, we're going to have the consumer price. We're going to have the personal consumption expenditures report coming out here on the 31st of August. This is the Federal Reserve's favorite measure of inflation, the core PCE. So it's going to be a market mover there. We also have the big jobs talk that we've been talking about so much, jobs, jobs, jobs. The Bureau of Labor Statistics puts out a monthly report that is highly, highly regarded and looked at, and the Fed continues to talk about that the jobs outlook is too strong. Well, we've got the personal consumption expenditures report coming out next Thursday, and we've got the BLS report coming out on Friday, and then Wednesday, the day before that, we're getting the ADP report, which is another employment reading. So we have a big week coming here with potentially a lot of market movers. And if the personal consumption expenditure is the Fed's favorite measure of inflation, and the Fed has been really focusing on jobs, to what they want to do with the federal funds rate, man, it's a big week considering the PCE and the BLS jobs number are coming out next week. Well, we will see. Hopefully, we continue to follow through and home loan interest rates improve and interest rates go down. Make sure that you like, subscribe, share, hit the notification bell wherever it is on your screen. I'll talk to you again. Have a great weekend.